Hello, welcome to the Stock Planner channel. Always looking for reversals or trends in the market. Let me ask you a question. What would happen to the stock market if the Iran conflict suddenly ended tomorrow? Good traders are prepared for that scenario. Would the market go up across the board? A lot of investors assume that, but that's not actually how it's going to work. Some stocks would surge, and some stocks would barely move, and some would actually drop. Perhaps oil. So in this video, I want to walk you through 5 stocks that could move most powerfully if these geopolitical tensions suddenly stop. And if you're a swing trader like me, these are the kind of trades that will make you happy. You need to take opportunities when they show themselves. So first, let's look at what's the big driver behind this scenario. And that driver, I believe, is oil. Whenever tensions in the Middle East, oil peaks or suddenly shoots up or suddenly dives, and all traders, swing traders, day traders, they start to worry about these disruptions. I think a lot of people know that a lot of oil flows through the Straits of Hormuz, and that route is being threatened by Iran. So what we've seen over the last week or so is that oil prices have went up, and quickly. So if the conflict suddenly ended tomorrow, and I don't think it's going to be a long term, because I don't think Trump is going to let this thing go too long, because nobody in America wants a long-term war. If the conflict suddenly ended tomorrow, the most likely immediate reaction would be that oil prices would start falling. Inflation fears, which they're high right at the moment, would start to ease. And investors becoming more comfortable taking risks again. Comfortable traders will push that market up, especially retail traders. And that's where these 5 stocks that I'm going to cover in the rest of the video come in. The first stock that can move rather quickly is Delta Airlines. Let's have a look at the chart. As a swing trader, I look for the tops and bottoms and the trend in between. Tops and bottoms and the trend in between, and try to make profit. We're looking at a weekly chart here in TradingView. And if you're a new trader, TradingView offers a free version that you can do a lot of this stuff that we're doing here. You can have up to 2 or 3 indicators. I use the RSI and the MACD. And if you see the RSI, when it's below the 30, that's indicating that there might be a trend reversal soon. And it's now in that area at the moment. So we're looking for a trend reversal and then capture that trend in between. And if the oil starts flowing again, there could be a little pop. And as you know, Delta Airlines depends on fuel. Without fuel, you have a plane crash. And likewise, the MACD will indicate a switch in momentum. And this momentum is up. And it was up for quite a bit. Again, each candle is a week's worth of data. So this was from May of 2025. It's been a steady drive upward. Then we had recently, last few weeks, a pullback. As I just showed you, the technicals don't look so hot. But the analysts that are covering this say this stock should go up to a total of $81, way up in here, over the next year. And those analysts are not predicting any downside from where it is now. That is neat. Simply Wall Street, which is, by the way, they have a free version out there that you can get pretty much this chart right here and not much else. You can do 2 or 3 full analysis of stocks for the free version, but it's fairly cheap. It's like $10 a month. But anyway, I look at this snowflake to get some kind of indication of how the stock is doing. And I look for it. Ideally, you would want it big and green, that a stock is undervalued, a future looks great. But this one's, a little palish, but it's undervalued. You can see instantly that this stock is undervalued. It has a pretty good past history. It pays a dividend. And the health of the company is fair to good. It's trading, according to Simply Wall Street, at 50% below the estimate of fair value, undervalued. And the earnings grew last year by 44%. This stock compares very favorably to other stocks in the industry. And this statement matches up with the TradingView statement that this stock should rise by 30 or 40%. So as I prepare for the eventual ending of this conflict, you could trade or sell a put on this stock short term. I think there's going to be a short term reversal soon. You could play it long term by selling a leap, do a cover call on this stock. Lots of options to go long. But just remember, if oil prices don't come down, jet fuel is their biggest cost. And what happens in history is that when oil prices fall, airline profits go up. And I think you can expect a fast move here if oil suddenly drops. So Delta and American Airlines as well, you should be watching very closely if you expect this conflict in Iran to end soon. Now the next stock is UPS, which is another stock that depends on oil. As you can see, that this stock has been in a downturn for quite some time, since July of 2023. The RSI only was useful for a short term up. Now, again, remember, this is a week's worth of data, so that would have been about a month and a half. And likewise here, maybe 2 months. And now we're seeing approaching the 30 range, which might indicate a reversal at some point in time. The MACD is in an upturn, but recently it had a single and a crossover, indicating that it looks like a short-term downturn. Will this reverse? I think oil might be the key. This company is essentially the backbone of global shipping and logistics. And again, fuel costs are a major expense for this company. When oil prices fall, shipping companies save a lot of money on transportation. But there's another factor for UPS. When war tensions drop, global trade sentiment usually improves. And that means business. Businesses feel more confident, consumers spend more, and shipping demands increase. That combination can make UPS one of the early winners if Iran situation improves. I'm going to tell you that last year I traded UPS one time and lost money during that downturn. That's the fallacy of selling puts. When the stock goes down, that's not a good strategy. Anyway, Simply Wall Street is saying that this stock is undervalued. You can look at this chart, the snowflake chart, and see that this stock is undervalued. It does pay a dividend. It's healthy. It's had some tremors in the past, and the future looks okay. It's trading 41% below fair value, and earnings are forecast to grow by a measly 7%, but that's growth. TradingView has this stock as a buy, and they're saying it's going to grow 17%. And there's some analysts that are saying this stock could still drop. There's 4 of them that say, hey, look, this stock could drop. But by far, most analysts are saying hold or buy. So part of trading is and part of swing trading is trying to predict the reversals and the trend in between, and whether you think the stock is going to go up or down or sideways. And that's the hard part of trading. Nobody out there is going to be able to tell you that. I can't predict it. You'd be better off taking advice from my dog. He can predict it better than I can. But if you get good at it, that could be your winning edge. I think this stock is going up. What do you think? Please leave a comment below. And while you're at it, subscribe and like this video. It'll help me a lot. The third stock is Ford. Now, I watched the auto industry pretty closely because of Tesla. Okay. And because that seems to indicate consumer confidence. In fact, I just bought a new car. Well, a 2-year-old car. So when fuel prices spike, consumers become more cautious about buying vehicles. I bought my vehicle before the conflict, which lasted about 2 weeks. And if you look, we're doing this stock on the weekly. We're analyzing a weekly chart. And the last 2 weeks, that stock has went down. Ford has went down. And you can see that recently they had a slow grind up, but last 2 weeks, it popped down. And I believe it could go ahead and drive back up again. You can see that the RSI is below the 30, and the MACD is still indicating, hey, we're in a downtrend. We've switched over, and we're in a downtrend. Things started fading out, and MACD seems to think it's in downtrend. But that can reverse with an oil spike or an oil price decrease. If oil prices fall, the economy looks more optimistic, the auto trend goes up. And I bought a larger vehicle myself. But lower gas prices will make the larger vehicles more attractive. I didn't buy a Ford vehicle, but I am thinking about buying Ford stock. They make a nice car and they make a nice truck. A lot of people don't know this, but I have a side gig business for many years, and I use it to write off some expenses, okay, because it's not a high powered business, but I need a truck. It's an antique business on a farm, and I need a truck. So I like Ford, and I'm looking at Ford for their high top trucks. So I think Ford is a stock that can benefit from a sudden drop in oil prices. Let's quickly look at Simply Wall Street and see what's happening or what they think is happening. Looking for that big and green snowflake. Well, we don't see a green one, we see a pale yellow. That means things are not, they're just average. The future looks bright, and it's currently undervalued, 15% undervalued. And earnings are forecast, this is nice, 62%. And if you don't like Ford, you can probably like GM, General Motors. They'll benefit from a drop in oil price as well. And analysts are in good agreement this stock will go up 21%. And TradingView says it'll go up 20%. 1 year target price. Lots of options here to buy the stock, sell a put, do a leap, even a credit spread. I'm keeping my eye on it. And the fact that for traders with not a lot of money, this stock is really, really cheap. You can afford to sell a cash secured put on Ford, and take credit each month. Not a lot, but it's steady income while you learn the stock market for other stocks. Let's move on to the fourth stock, which is, I'm afraid to say this, Nvidia. Very strange. How would a drop in oil prices once the conflict ends, how would that help Nvidia? Let's look at the chart quick. Boy, if you could catch these swings with Nvidia right there. The RSI was below the 30. It's didn't hit 30 now. But the MACD thinks that Nvidia has some ways to go down yet. So the answer to that question about dropping oil, I believe there's an indirect effect. Here's why. If oil prices drop, inflation pressure drops. And if inflation pressure drops, the Federal Reserve becomes more comfortable with the lower interest rates. Lower interest rates are extremely bullish for growth, especially technology stocks. So I am definitely a long-term investor in technology stocks and technology ETFs. Nvidia has been one of the biggest leaders in the AI boom. And I do believe this year AMD is going to catch up and take some of its market share. So if the oil prices drop and investor confidence improves, I believe Nvidia and tech stocks will go up. What do you think? I'd sure love to hear the other side of the story in a comment below. Let's take a quick look at where the analysts think Nvidia is going. TradingView says this is a strong buy, 48%. Wow. There is some analysts saying it's going to go down a little bit more. One of them, of the 50 or 60 that they're covering this, 69 analysts cover this stock. Some think this is going to go high as 380. That's way up in the stratosphere. There's a green one. Future looks real bright. It's a healthy company with a good past financial history, and it's undervalued. Now, the price to earnings ratio is really high, 36.5. Earnings are expected to grow only 22% after growing by 65% over the last year. Looks like things are simmering down. Can't help it. I like this company, and I like AMD, only trading about $180. So let's go to the next stock. So the last stock is an oil stock. What do you think is going to happen if the price of oil suddenly drops? I think the stock is going to drop because oil companies actually benefit from prices to rise, not drop. Higher oil prices mean higher revenue and stronger profits for the oil producers. Didn't take them but an hour after the Iran conflict started to raise the oil prices. So I think if the conflict ended tomorrow and oil prices dropped, energy stocks and Exxon Mobil will also pull back. And that's why sometimes the best opportunities is understanding what stocks move up and what stocks move down. And I think Exxon Mobil will move down. And you can see from the stock chart that this stock has been on a tear and a steady move up since May of last year. And currently it's hovering in an area, maybe range bound. And this is a top runner in RSI. It's called the top runner. And that's why RSI is okay to predict reversals, but you can't really predict how long a stock is going to stay a top runner. And it looks like this stock was a top runner from there to there. You would have, if you had went short when the RSI is above the 70, you would have been in trouble. That's why I like to look at the MACD as well. And the MACD is indicating that that was in an uptrend. And I like to look, as a quick look, I look at the green, to see if green's here on the histogram. And that indicates, hey, it's not a good idea to maybe short while it's green. The analysts rate this as a buy, but look at this. It says it's going to reach 147 in 1 year. Well, it's already at 156. No, not a good thing. Let's see what Simply Wall Street has to say. Exxon Mobil, big and green. Future doesn't look too hot. It's slightly undervalued. It's trading at 30% undervalued. Earnings are forecast to grow by 10%. Pays a dividend. Company's healthy. Now, I just signed in. I was using Simply Wall Street as a guest, but I also have an account with them, and I want to go ahead and dive for the valuation of this company. Take a look a little more. So Simply Wall Street will let you do one or two of these full analysis. And according to free cash flow model, this stock should be trading at 220, and the current price is 156. So this differs slightly from the model that TradingView is using, where it says that the stock will be trading less than its current price in 1 year. This saying that using the fair value model or the free cash flow model, this stock should be trading at $220. So if the situation improves in Iran, Exxon Mobil could drop. And from a swing trader's point of view, this is what we like to see. We like to see a reversal. We want to anticipate the reversal and then capture the move. And this move could happen in the airline industry. And you could look at Delta, an American airline, the transportation industry, looking at Ford and General Motors, of course, consumer stocks like Nvidia, consumer and technology, like Nvidia and UPS, all can be affected by a drop in oil prices. So today we looked at Delta, UPS, Ford, Nvidia, and Exxon Mobil. Some could surge and some could not. And remember, nobody really can predict what's going to happen. All we can do as traders and swing traders is anticipate and look for those reversals and capture that trend in between. I hope this video helps. Remember to don't forget to subscribe and like the video. It'll help my channel, and keep following and learning and winning for life. Happy trading. We'll catch you on the flip. Thanks for watching.